Hey YouTube, hey YouTube, hey YouTube, how you doing? It's Kev the analyst, and today, we are reviewing the trades that I took on my Propfirm account. I'm not yet funded, and as you can see, it's the journey to being funded. Okay, so before we go to the analysis of the Propfirm performance and the chart work, I'd love to say that I think I've finally found my edge. Okay, I think I've finally found my edge, and I think my edge is on trading one asset, because I've realized that if you trade so many assets, you come to conclusion that you make profits on one asset, then you go and lose it on another asset. I don't know if you understand what I mean. So I've realized that the best thing that one can do is trading less. Trading less is what professionals do, and that's what I should be doing. Okay, and that's what I've been doing for the past, let's say, 2 weeks. Okay, my aim for this 2024 is to trade less compared to how I used to trade, let's say, 2023 and 2022. And I came to realize that I should only focus on just one pair, and that's NAS 100. I've come to fall in love with this pair. This pair gives me some type of confidence. It doesn't consolidate for long. It keeps moving up and around. And I think it's because the Nasdaq 100 companies, they can't be going for just losses and profits all along. I mean, they can be steady over a long period of time. Okay, so I anticipate that. So I've come to realize that one pair is enough. One pair is literally enough, and you don't need to have so many pairs on your watch list. So what I'll be doing is that I'll just be trading one pair. You know, we've gravitated from trading GBP USD and Euro USD. We've come to trading Nasdaq. We went away from Nasdaq, then we came back to Nasdaq again. Okay, I had let's say at the end of December, I had, let's say, like 4 pairs that I was trading. I was trading gold, I was trading Nasdaq, I was trading GBP USD, I was trading GBP JPY. But I've come to realize that you don't need all those pairs. Okay, you just need a good strategy, a good risk management protocol, and a good mental fortitude, obviously, and let's say a pair that you understand better. Okay, so I think that if you can understand how Nasdaq operates, or any other pair that you feel that it aligns with you, and maybe you understand the price action more on that pair. Okay, once you see that pair, once you have a grip of that pair, I will tell you, just hold on to that. Okay, so for me, I will be trading Nasdaq for better for us. It's me and Nasdaq from now. I will be trading Nasdaq for better for us. Okay, so me and Nasdaq, we are now fully engaged. We will be from now on till the end of times. I think I'll be very attached to this pair. Okay, because US stocks will forever be there. The US companies will forever be there. Technology will forever, or do we say, technology will forever move from one point to the other, or develop. Okay, yeah, that's the word I was looking for. So these US companies will forever make money, and I think the economy of US depends on these companies. Okay, the first 100 companies, most of it depends on these companies. So I think the best thing that I can do is that I should focus on these US 100 companies first, because for the currency, you never know if tomorrow they introduce CBDC and they say from today there is no currency. Okay, so what I'll be doing is that we'll be watching US 100 closely. Okay, and we will still be executing in accordance to the rules that we have for ourselves. Okay, what do I mean by that? I mean that when we trade, we will be looking for New York session opens, and that will be our kill zone all through from from Asia, from London. That will be data collection time. We'll be collecting data, then we will be using it to analyze to see what New York session have in place for us. Okay, so that's how we'll be operating, and the goal is to, if you've noticed, Nasdaq moves, and even if you have a good risk management protocol, just a few trades you can pass all these firms. Okay, there's a reason most people in the firms are trading. Not everyone, but most people. I recently saw a Kenyan in the funded next, not funded next, the funded trader. Yeah, he reached, let's say, like $25,000 in payout, and he was trading US 30. See, there's a reason that Kenyan did that number through US 30. Okay, and it's a good indication, because I don't think these Propfirms will be losing money anytime soon. And the stock, even if you look for Nasdaq over a long time, Nasdaq didn't, not Nasdaq, let's say US stocks. The US stocks have always been going up for a long period of time. So that's it for now, and let's get to the charts and see what our performance was and how we performed this week. Okay, let's tune in. So this was the setup. This was the setup cooking. You can see how my annotation is. I was anticipating for price to come back to this fair value gap here. You can see this fair value gap here, and that's where my entry is, and this where my stop loss was initially, but I decided to raise it up to this level. Okay, because I knew the algo might come and hit this area, but once it breaks above this consecutive encroachment of the week, that was invalid. Okay, so what I did is that I put my entry here. So on the 5 minutes chart, I wanted price to come to this fair value gap once again, then we could have gotten the sell-off. Okay, this was the break of market structure right here. So what I did is that I anticipated for price to come to that level, and it did. You can see price came right into this level and activated my sell position. But what I think I should have done right now, I shouldn't be clicking, as in I shouldn't be putting my limits order before price getting to that position. What I should be doing is that I should be looking for signals that price has now respected the zone and it has decided to reverse, because this exposed me to so much risk. Imagine putting an entry here, risking 1%, then you can see price gravitate upwards like this. Okay, man, this was quite a slap on my face. Okay, so I had a stop loss right here, and as usual I was anticipating for price to at least get to this level, then reverse. I didn't anticipate to see it break these two down to up close candles. Okay, but they did that. So after that, I closed my position without them being hit by the market. So after I closed, I knew that my trade was still valid, and it was just a matter of time before I was looking for another opportunity. So once I realized that the sell-off had occurred right here, and I waited for the PO3 to form in the 4-hour chart, 10 a.m. candle, and once I saw this phenomena here, I realized, okay, this buy here to this fair value gap. So I sold right here. Actually, I sold right here. I sold here, and I closed my position here and recovered the loss that I took from this area to this area. Okay, so it was a good day, and that's how the CPI after news occurred, and that's how I traded it. So let's go to my skill funded account and see how we've performed so far. So my people, right now we are at break even. We are $5 up, and you can see that on the profit part here. We are $5 up. We've managed to come out of the drawdown. The last week we had a drawdown, but this week we've managed to come out of that drawdown, and we are playing around the break-even point. Okay, so you can see we've already traded for 7 days. We have a 56% win rate actually, even if we got some big good losses sometime. And this is the curve. You can see we just came out of the drawdown, and right now we are playing at that level where we at break even. Okay, so this is the good thing about it. We managed to come out of the drawdown. Sometimes the drawdown can be boring and you can feel like, is this thing going the way I want? But most times it feels like just normal if you can get out of the drawdown. And that's the point that I want to be at, because when you are a good trader and you're in drawdown, you don't tense, you don't overthink, you don't do nothing. You just use your skill and follow your trading plan. And that's the best thing about it. Okay, that's the best thing about it. When you're in drawdown but you know what you're doing, it's easy to come out of the drawdown. And that's the level of prowess that I want to achieve. Okay, so when we come here, we can see that we've already took 16 trades. Man, I just want to reduce the number of trades that I take a whole week to, let's say, like 3, 4, 5, maximum 6 trades. Okay, but it's good to take like 5 trades because I want to be showing up Monday to Friday. New York session I'll be on. Okay, so these are my winners. I have 9 winners and 7 losers. My win rate, you can see it, 56, and my loss rate is 43. Profit factor, blah blah blah. Biggest winner is $73 and the biggest loser is $61. And that I took this $61 at it was when was it? It was yesterday during the CPI, but after the CPI. It wasn't before the CPI, it was after CPI news. And that's why let's go, let me show you the trade where you are at. It was a sell position that I took. Then price came to my entry level, not entry level, to close to my stop loss. I decided to cut loss early, but once I reduced the losses early, man, it bite my ass. Okay, so it's that trade. It was a nice position trade. Yeah, where is it? I can't see it, but somewhere here. Can't seem to locate it, but yeah, it was as we have seen, it was a $62 loss, and I managed to recoup it during the next trade. I took another sell because I knew that my analysis was quite good, and the DXY CPI report came in positive, so I was anticipating for Nasdaq to go down. Okay, so that's it for today, and I hope you enjoy the journey to being funded. So I'm thinking of going live to the journey to being funded. I want to be live showing the whole trade. Okay, I want to be live streaming it, and I hope so that you guys can see me execute right at that time. You can see me in the tension zone, because I won't lie, it's some tension out there. Okay, so it's up, it's good, and I'll see you on the next.